When we talk about compound interest, Albert Einstein said it was the greatest mathematical discovery of its time. So let's take a look at the value of compound interest and how it can affect you. How compound interest works is you have an initial sum of money, and that money grows at a certain rate. And so now you have your original sum plus the earnings. Now when you combine those, that amount of money also grows into the future, and so now your earnings are even higher than they were originally. And so that's the value of compounding, is it keeps growing bigger and bigger and bigger over time. Think of it as a snowball. If you have a snowball at the top of a hill, and then you push that snowball down the hill, as it rolls, it continues to pick up more and more snow, and it gets bigger and bigger. So when it's finally at the bottom, when it stops, it's a much larger snowball than what you started with. That's a good example of how compound interest works. For compound investing to work, there's two things that are required. One is time. You have to give your investments time to grow. And the second is reinvesting your earnings. Because if you reinvest your earnings year after year after year, that snowball, like we talked about, is going to get bigger. So those two things are very critical for compound investing to work. Now, with compound interest, there's one thing you have to discipline yourself to do, and that's to be patient. You don't want to be dipping into this money. You want to give it time to work. Because even though it's going to grow over time, there will be time with investments that it's going to dip in value just because of the way the market works. And that's okay, that's normal. But you got to give it that time to work and grow like you want it to. And over time, you should get the results you want. Let's use an example. Let's say you have $1,000 and you're going to invest it, and it's going to earn 7%. So at the end of that year, you're going to earn $70 in interest. So now your money is worth $1,070. So now you're going to reinvest it the next year, and it's going to earn 7%. So instead of earning $70 the second year, it's going to earn $74.90. So you've seen an increase in what your money is earning, and that's the power of compounding. Now you've been investing for 40 years, and you've earned 7% a year. You know how much you're earning in interest now? $980. Remember, originally it was $70 the first year. Now it's over $980. So that's how compounding is going to work over time for you. Now with investing, you do take risk, and not every time period will be positive, so you will see some fluctuation. But let's recap what's going to be the benefits of compounding interest. First, it's important for you to start as soon as possible. Give your money time to work. Second, add to your money regularly. The more you can add to your snowball, the faster it's going to grow. Third, be patient. Rome wasn't built in a day, and it's going to take time for you to see the effects of your snowball. But give it time, and you should get the results you want. Thanks for watching. If you'd like to learn more about compounding interest and how to invest for the future, give me a call. My number is 417-351-2942.